Monday morning, folks, and a very warm welcome to today's edition of the podcast. Joining me today is once again Sunil and Ronan. Gents, a very warm welcome to you both. Gold broke below 3270, a very critical level. We were talking about it back and forth last week, and we did see some follow through correction up until 3200 and then a temporary pullback from there. Before we get into the price action bits, Sunil, Akshaya Tritiya was upon us. We wanted to understand how were jewelers positioning themselves? What was the sentiment and mood in the markets? If you could give us a little bit about that.
The market was very positive. All the feedback we've got was the buying was very strong. I think it's reflective of the fact that the economy is pretty strong right now. But overall, buying was very good. We heard about lines in retail outlets, people waiting to buy. So I think overall the sentiment is very positive. Now the jewelers have to figure out whether they should cover their price risk or wait for the price to go lower. And I think that's why there'll be a lot of interest to find out what's going to happen today from yourself and Ronan.
We also had the holiday in China, the long holiday, and that potentially could have impacted prices. You probably did some research on that offline. Could you give our viewers a little bit of an insight into how the two are linked, what that meant for price discovery, and maybe how that could have contributed to a correction in gold prices?
Since about a year ago, both the SGE, the Chinese Gold Exchange, and the SHFE, the Chinese Futures Exchange, have been increasingly contributing to global gold price discovery, which traditionally has been just dominated by the LBMA over-the-counter market in London and the COMEX gold futures market. So with the fact that the Chinese markets are now contributing more to price discovery, when they take a break, as they did this week, you can see literally that their lack of contribution is in some way impacting the price. Back on the Friday, the 25th of April, both exchanges came out with announcements. They were risk control announcements because they knew that they would be closed for so long. So they were literally trying to manage the risk sentiment of their participants. And they both increased margin ratios on a lot of products. The futures exchange includes a lot of other commodities, but the Shanghai Gold Exchange increased it on gold as the futures exchange. So I think there was a lot of pairing of positions, liquidation of positions. And that was picked up in the media, but they didn't really go the extra yard and say why that happened. And I think it was because of the announcements by both exchanges that they increased their margin limits. And interestingly, they're both going to revert back to their previous margin ratio limits when they reopen this week. So it will be interesting to see whether it creates more risk on sentiment from the traders who just literally decided because of the long holiday that they don't want to be exposed during a time when they've no control over their positions.
On the technical front, Sunil, Ronan, we've seen some interesting chart patterns develop over the last week. Currently, I'm on the 4-hourly chart of US spot gold. We're able to see a couple of things. A, the metal is neatly retracing from this high of 3500 that had formed around 22nd April. You see it creating lower highs and lower lows progressively for 3 weeks now consecutively. So this is definitely a confirmation that we are in a bearish downtrend. Secondly, if you notice these three colored trend lines, these are the 20, 50, and 100 exponential moving average trend lines for the 4-hour periods. You see that for the first time last week, after 4 weeks, gold has broken below each of these three color trend lines. And the last times this happened, gold managed to break above it and climb above each of these three trend lines and create new highs. It remains to be seen whether gold is able to do so again. On the daily chart for gold, we're able to see that it has firmly found support somewhere around the 50% Fibonacci retracement of this region from 2949 low, and we have further supports here down at the 3164 level. So as you can see, the 61.8% retracement coincides with 3164, and then the 78.6% retracement over this line over here corresponds to 3065. So these are the next areas of support that we have in the metal, and I do expect to see there's going to be some retracement below, and here's why. Best insight this week is actually found on the weekly chart, which is right here. We saw that there were two successive big moves in gold, 2 successive weeks where gold really made big moves, one around $200 right here in the week of 7th April, and another around $90 right here in the week of 14th of April. We then saw the formation of this shooting star pattern, as you can see here, which is a long wick here, but a bearish candlestick overall for the week. And last week's candlestick, as we know, was excessively bearish, which was matching the bullish candlestick chart that you see in the week of 14th April. So this three candlesticks together represent an evening star pattern where one strong green chart is followed by a star, is followed by a strong bearish candlestick pattern. What this means is that we definitely could be in the middle of a longer term bearish trend, and there should be some test below this 3164 support here. If that happens, there is an indication that we're in for a deeper correction, and this could potentially mean bears will be firmly in control and challenge these next supports that we have here around 3164 and 3065. From an economic standpoint, the most important data point that we have is the Fed interest rate decision for this month. From the CME Group's interest rate probability chart, we're seeing that for this upcoming meeting, the probability of rates remaining the same is about 97%. So much so, even in June, in next month's meeting, the probability of rates remaining the same has actually improved to 64%. But it's actually in July where we are now projecting there to be a rate cut. And this anticipation is likely going to give a bump to gold prices. So in this week's economic interest rate decision and the press conference led by Chair Powell, we're going to see whether he gives any indication of a rate cut probably in the July meeting or any subsequent meetings, and what is a terminal rate cut going to look like for the year of 2025. Let's see how the markets play out this week. Thank you both for your views. Till then, thank you so much and goodbye.